Hello again, folks, and welcome to week 2 of Operations Management. In the last lecture, we basically introduced chapter 1 and the concept of operations management, what it is, and why it's important. So basically, every single operation, whether it's a non-profit, whether it's a government entity, whether it produces goods, whether it produces services, to every single entity, managing their operations is of critical importance. Um, for example, Boston Media House, we are in operation. We manage a timetable, we manage registrations, we make sure that students are registered for the correct qualifications, that there's lecturers for them, that assessments are done, that they're marked, and that eventually students graduate with knowledge and information and skills that get them into the workplace and enhance them as entrepreneurs. Okay, so as part of last week, we also looked at a very important section on the input-output process. If you are sketchy on that, if you have any questions, you can always raise that at the live Zoom session. So please make sure you understand the purpose of the input-output process and how it works in different entities. And then we also looked at the concept of the process hierarchy. So as part of operations management, there are many different processes. Okay, so at Boston, for example, we have the registration process, we have the assessment process. On the in the background before you guys come, we have the entire timetabling process. So many different processes contribute to smooth operations. Okay, so in this chapter, which is chapter 2, we're basically focusing on the role and strategic objectives of operations management. So in this particular week, we're going to focus on the triple bottom line concept, which I'll get into shortly. So as I alluded to previously, operations management is important because it gives business the ability to compete. So by having proper operations that run efficiently, effectively, a business is able to compete and, maybe even do better than its competitors. Okay, so now we move on to the triple bottom line concept. Okay, so there are 3 P's. It's also known as the 3 P's. So every business has to take into account its effect on the planet. So for example, mines have to be very, very cognizant of this because mining depletes natural resources. It creates pollution. It damages the water. So mining companies, if you look at their corporate social investment and their corporate social responsibility report, rather, they look at, well, what is our impact on the planet? Okay, and they have to try and minimize that. Then there's the second P, which is people. So every organization has to take into account the impact on the quality of people's lives. Here again, mining companies, in mining towns like Rustenburg and places like that, they have to take into account, well, we have mined the minerals, but have we uplifted the community? What have we done? What is our impact on people? Okay. And then finally, P for profit. So then there's the economic side of the operations. So every business, or generally, large business will have stakeholders in the form of shareholders, but every business has stakeholders, people who have an interest in the business. And, a business has to be run efficiently. Resources have to be used effectively in order to make sure that the business turns a profit and there's a job for the employees, the suppliers are paid, and the shareholders, if there are any, receive a return on their share. So you can take a look at a little bit more about this in the textbook. The triple P. In the old days, the focus of firms was just go into business to make a profit. Now today, firms have to be more responsible and think about the impact on the planet as well as people. Okay, so I've basically summarized the social, economic, and the environmental bottom line from the 3 Ps over here. Okay, so the next area we're going to look at today is operations principle, and all operations expected to, we'll say, are expected to contribute to their businesses. Okay, so the role of the operations department, as you can see, is quite wide. Okay, so operations management can actually contribute to the competitiveness of a firm, because in the operations department, they can look at the costs. Okay, so remember in the previous session, we talked about processes. So there are going to be various processes for producing goods and services. The operations process or the operations manager can say, well, maybe our process is using too much water, is wasting resources, and we could relook it. And in that way, they can reduce the costs. The operations team can also help to improve customer satisfaction. So operations can look at, well, how are we producing products? Is there any way we can enhance our products to make the customer happier? The operations function and the operations manager can also look at reducing the risk of operational failure, and basically look at ways in which they can limit disruptions to the operations function. And, maybe the goods producing, they can look at how they can produce goods in a way where they limit disruption. I know, load shedding is a huge thing with manufacturing companies. Load shedding stops production. And I think today most firms probably have invested in generators. It can also reduce the amount of investment or capital that is necessary to produce the required type of goods and services. So what operations can do is look at how to run the machines production more effectively so that less money has to be poured into capital for machinery. And finally, operations can contribute to future innovation. So they can learn from what has worked, what hasn't worked in the past, and improve upon their goods and services. All right, so in this particular lesson, we have focused on, or we have begun to introduce, why operations performance is vital. Okay, as part of that, we've looked at the triple bottom line concept. You must be able to explain each of these and maybe relate it to a particular case study or scenario that I would give you. And then you also would have to be able to explain how operations can contribute to their businesses. So I might give a scenario, a particular company, and then you would have to explain, well, what can they do in terms of their operations to improve their competitiveness? Okay, so here's a useful YouTube video, and then please look at the first case study, A Tale of Contrasting Efficiencies. Read through that. We will discuss that during our Zoom session. All right, so that's all for today. Thanks, folks, or for this week. We will chat soon on the live Zoom session.